Welcome back to the deep dive. We're digging into the material you sent over on Neonode Inc. today, ticker NEON.
That's right.
And you flagged this because, well, something pretty significant just happened, a major shift.
Absolutely. So based on this info, our mission here is to really understand this key event, the big settlement between Neonode and Samsung,
Okay.
and then unpack what that actually means for the company going forward and, what potential investors like you should probably be focusing on now.
Right, because the Neonode of, say, a month ago is just fundamentally different now, isn't it?
Totally different. That date, June 13th, 2025, that's the pivot point.
So let's explore that. How did this happen?
Well, June 13th, that's the watershed moment. They reached a settlement, which means they avoided a potentially very tricky trial with Samsung that was coming up later this year.
And this wasn't just out of the blue, right? This settlement followed a really big legal win for Neonode last year.
Precisely. You have to go back to August 20th, 2024. That's when the U.S. Court of Appeals for the Federal Circuit, the CAFC, made a huge ruling.
Okay.
They basically reversed a lower court decision. That earlier decision had invalidated Neonode's main patent, the 879 patent.
Ah, that's the famous slide to unlock one people talk about.
That's the one. The CAFC essentially said, nope, the lower court got it wrong. These patent claims are valid. And that was almost existential for Neonode.
Right.
It just removed the biggest legal question mark hanging over them. The material we have even says that once that validity was confirmed, a big settlement became, and I'm quoting, a near certainty.
So win the validity fight and the settlement follows.
Okay.
Now, the exact dollar figure is confidential. It's normal.
Yeah, very standard.
But how do we get a sense of the scale here based on the info you sent?
Good question. While we don't have the number, the sources give us clues. They point to analyst models from before the settlement, like from Redeye.
Okay.
Those models were estimating potential values that translated to, well, pretty significant figures per share. I think maybe $31 to $35 per share range in some scenarios.
Oh, wow.
And expert commentary also threw around figures like $1 or a few billion USD as a possible settlement range. So even at the low end of those estimates, compared to where Neonode was, it's clearly a massive amount of money.
And important to remember, Neonode wasn't funding this fight entirely on their own dime. They had partners, right?
Critically important detail, yes. They worked with a litigation funder, Aquitas Technologies.
And how does that affect the cash that actually lands in Neonode's bank account?
So the deal structure is that Aquitas gets 50% of the net proceeds. That's after the legal bills are paid.
Okay, net, not gross.
Right. Based on the estimates floating around, this likely leaves Neonode with something like 42.5% of the total gross settlement figure.
So less than half the headline number ends up with Neonode.
Correct. After the funder and the lawyers take their share.
But even with that split, the change to Neonode's financials must be dramatic. Let's talk about that balance sheet transformation.
It's night and day. Absolutely stunning. So end of March 2025, Neonode had about $15 million in cash. And they were burning cash operationally. They maybe had 2.5 years of runway left if nothing changed?
Mm-hmm.
It wasn't a comfortable position for funding the business and other lawsuits?
Pretty precarious. But this settlement just flips the script entirely.
Completely. Let's just take a hypothetical low-end number. Say the gross settlement was $500 million.
Okay.
Neonode's estimated 42.5% net share would be over $212 million. Add that to the cash they already had, and suddenly their pro forma cash is over $227 million.
From $15 million to over $227 million.
Exactly. And if the settlement was bigger, say $2.5 billion gross, well, then their net share could push their total cash position easily past the $1 billion mark.
That leap from $15 million to potentially hundreds of millions, maybe even $1 billion,
Right.
It really hits home when you look at cash per share.
It really does. Before this, with about 16.78 million shares out, that $15 million was roughly 0.89 cents per share in cash.
Right.
Now, using those same hypothetical settlement figures, the cash per share could jump to maybe $13.56 on the low end, or potentially a staggering $64.21 on the high end, just from the cash infusion alone.
That's more than just a change. The sources are calling it a fundamental risk inversion.
That's a great way to put it. Think about it. The biggest worries before were, will they lose the Samsung case?
Mm-hmm.
And will they run out of money?
Yeah, basic survival questions.
Those are basically off the table now. Survival isn't the main question anymore. The risk for you as an investor shifts dramatically. It moves from the courtroom dramas to the executive suite.
Meaning
Meaning the new primary risk is, can management actually use this huge pile of cash, effectively, to build real long-term value.
Mm.
That's the challenge now.
And maybe a side benefit. Does this change how people see the company? Less patent troll, more something else?
Potentially, yeah. It helps them move beyond that label, the non-practicing entity or NPE tag.
Right.
Now they can present themselves as a funded tech company that successfully monetized its own IP to fuel its future. That could definitely improve their reputation, maybe attract different investors or even talent.
Okay, so Samsung. Case closed, big check received, but that wasn't the only major lawsuit involving this patent, was it?
Correct. And that brings us neatly to the next big potential catalyst.
Yeah.
The lawsuit against Apple Inc.
Also in California, same 879 patent.
Exactly. That case was deliberately put on hold. Stayed is the legal term, while the Samsung fight played out in Texas.
Their move.
Seems like it. Now that Samsung settled, that stay gets lifted. The Apple case is back in play front and center.
And the Samsung settlement isn't just cash in the bank. It's described as a strategic weapon for the Apple case. How's that work?
Yeah, that's a really key point from the material. The Samsung deal effectively sets a market price for infringing that specific patent.
Oh, okay.
Apple can't really go into court now and argue convincingly that the patent is worthless or invalid when their biggest rival, Samsung, just wrote a large check for infringing the exact same patent.
It gives the patent real-world economic validation on top of the legal validation from the CAFC.
Precisely. It puts Apple in a much tougher spot.
I bet. What are their options now?
Well, they face a jury trial over a patent that's already been upheld by the highest patent court and has just been implicitly valued by a major competitor settlement. That definitely changes the risk calculation for Apple when they think about negotiating versus fighting it out.
And analysts looking at this think the potential stakes with Apple might be even higher than Samsung.
Often, yes. The pre-settlement estimates frequently suggested bigger numbers for Apple. You saw ranges like $47 up to maybe over $121 per share in potential value.
Why higher for Apple?
Mostly down to market share, especially in the high-end U.S. phone market, and Apple's generally higher device prices. Both tend to push potential damages calculations up.
So does the Samsung win make a win against Apple more likely?
Materially, yes. The legal validation from the CAFC plus the market validation for the Samsung settlement significantly boost the probability of a favorable outcome.
Are there still hurdles in the Apple case?
Oh, sure. It's not automatic. For instance, proving willful infringement against Apple might be harder without any prior direct licensing history between them and Neonode, which could affect potential triple damages. But the big foundational pieces, validity and demonstrated value, are now in place.
So if you're looking at Neonode now, how should you frame this Apple lawsuit?
The sources are suggesting you view it as a kind of free, long-dated call option. Meaning the really hard work proving the patent was valid, showing it had market value has largely been done and essentially paid for by the Samsung settlement proceeds. The Apple case now represents potentially significant extra upside, but with a lot less risk attached than before.
Okay, so huge cash from Samsung, Apple case looking stronger, but Neonode isn't just a patent company, right? They actually make stuff, or they did.
They do, and the settlement cash is the crucial fuel for a strategic pivot they were already starting. Back in December 2023, they announced this sharpened strategy,
Which involved
moving away from their traditional business of making and selling hardware, specifically their touch sensor modules, the TSMs. Those had lower margins.
And the sources said TSM revenue was already declining anyway, right? Down 37% year over year in Q1 2025.
Exactly. So phasing that out seems logical. The new focus is purely on a high-margin IP licensing model. They have two core tech platforms for this. First is Z-Force.
That's the older one, more established.
That's right. It's already in over 90 million products.
Yeah.
It uses infrared light to detect touch or objects without physical contact. Think gloves, rugged screens, that kind of thing.
Okay.
Since they're getting out of manufacturing, the future for Z-Force is licensing the tech and designs for niche markets.
Like those deals mentioned, NEXTY for Japanese amusement machines. Yes, are those examples?
Exactly. Licensing Z-Force where its specific features add value. But the real growth engine, according to this material, the one they're betting on, is multisensing.
Okay, this is the newer stuff, computer vision, AI.
That's it. Multisensing is basically a software platform. It uses AI to analyze video from standard cameras.
What can it do?
It can track eye gaze, head position, driver alertness, hands-on wheel detection, monitor the whole car cabin, augment digital mirrors, lots of in-cabin sensing applications.
And they have some kind of edge with training their AI using synthetic data.
Yeah, that's highlighted as a key differentiator. Using synthetic data lets them develop and refine features much faster, like in weeks instead of months or years. That's a big plus in those moving tech areas.
And where are they aiming multisensing primarily?
The big target is automotive in-cabin sensing, specifically driver monitoring systems, or DMS.
Why DMS?
Because new regulations are driving demand. Think the EU's General Safety Regulation, GSR, and Euro NCAP safety standards. They're increasingly requiring these systems in new cars.
So a growing market. Have they made any real progress there yet? Any validation?
The sources point to a couple of things. They won an award, a 2025 Just Auto Excellence Award, for their DMS software innovation.
Okay, that's nice.
But more importantly, they actually secured a DMS software supply agreement. It's with a leading commercial vehicle OEM.
OEM, original equipment manufacturer. So a real vehicle maker.
Exactly. A contract to put their software into actual trucks or commercial vehicles. That's tangible progress.
And the settlement cash basically lets them pour gas on this whole strategy.
That's the idea. It allows them to fully fund this pivot. They can scale up engineering, build out support for multisensing customers, and hopefully convert more of those initial paid development projects, the non-recurring engineering or NRE work,
Right.
into long-term, high-margin production licenses. That's the goal.
And that NRE revenue growth is something to watch.
Absolutely critical. The material flags a huge jump, like 15–19% in NRE revenue in fiscal 2024.
Wow.
Now, it started from a tiny base, but that kind of growth is a vital leading indicator. It shows customers are paying them to integrate the tech. That's the necessary first step before you get the really valuable recurring production license deals.
Which brings us right back to that new central challenge we talked about.
Yeah.
What do they do with all this money? Capital allocation.
Exactly. Hundreds of millions, maybe over $1 billion. The absolute key test now for the management team, led by CEO Daniel Alexis, is deploying it smartly. It's a great problem to have, a high-class problem.
Yeah.
But it's also probably the single biggest risk for investors now. Get it wrong, and a lot of value could be wasted.
The materials lay out 4 main options or paths they could take with the cash.
Right. Option 1. A special dividend.
Simple. Direct return to shareholders.
Immediate tangible cash back to the people who stuck with the company.
Mm-hmm.
But it's a one-off event. Doesn't necessarily build future value.
Okay. Option 2. A share buyback program.
Also returns value, often more tax-friendly than dividends. But for Neonode, there's a really interesting strategic angle here.
Which is?
Reducing the share count directly increases the per-share value of that remaining Apple litigation claim.
Ah, okay. Walk me through the example they used.
Sure. So imagine Apple eventually settles for a net amount to Neonode of $1 billion.
Okay.
With the current share count, around 16.78 million shares, that $1 billion adds roughly $59.60 per share.
Right.
But if Neonode uses some of the Samsung cash to buy back shares, maybe reducing the count to 14 million, then that same $1 billion from Apple suddenly becomes worth over $71 per share. That's almost a 20% boost in the per-share value from Apple just by shrinking the share count beforehand.
That makes a buyback seem, well, pretty strategically smart with Apple still out there.
It definitely adds a layer beyond just returning cash.
Oh, okay.
Third option, aggressive R&D and organic growth.
Plow the money back into the core business.
Exactly. Ramp up development for multisensing, especially for the automotive DMS market. Build out global sales and support.
Aiming for long-term growth.
Right. Build long-term enterprise value. But no immediate cash return for shareholders, and success depends on executing well in competitive markets. They need to invest wisely to win deals.
Makes sense. And the fourth option?
Mergers and acquisitions, M&A.
Using the cash to buy other companies.
Yep. By technology, by teams, by market access, it can be the fastest way to add scale or capabilities.
But also risky.
Potentially the highest risk. You could overpay. Integration is always really hard. Cultural clashes. M&A is notoriously tricky to get right.
So how management balances these 4 things? Dividends, buybacks, internal investment, acquisitions, that's the crucial decision now.
Absolutely paramount. This decision set will really determine if the Samsung settlement was just a one-time windfall or if it becomes the foundation for a genuinely successful, growing tech company.
And this huge shift means the old ways of valuing Neonode just don't apply anymore.
Not really. Things like PE ratio, price to sales, they're not very useful when the core business was loss-making and is undergoing such a radical transformation.
So what's the suggested approach now?
The sources recommend a sum-of-the-parts model, SOTP.
Okay, break that down simply.
You value the company in pieces. Part one is the net cash from Samsung. That's the most solid part, the known quantity. It acts like a floor value.
Got it. Part two.
The core business value. That's the ongoing licensing business, mainly Multisensing's potential in automotive DMS. You'd try to value that based on future cash flows, maybe using a DCF model, or by looking at comparable public licensing companies.
Right. And the third piece.
That's the Apple litigation value. You have to estimate the potential net recovery from Apple, consider the probability of getting it, which is higher now, and discount that future potential value back to today's terms.
And you add those three parts up. Cash plus core business plus Apple potential and post-people value estimate.
That's the basic SOTP framework. It reflects the new reality of the company.
And that new reality has a totally different risk profile. Let's recap that.
Okay. Risks that are gone or vastly reduced. Samsung litigation risk, running out of cash risk. Those are off the board.
Good riddance. What risks are increased or are now the main focus?
Well, the Apple litigation outcome risk is still there, not if they get something, perhaps, but how much. Market expectations might be high. Then number one is management execution and capital allocation risk. How they use the money is the biggest question mark.
Right.
And there's still core business competition risk. They're funded, but DMS is a tough market. Medium to high risk there. Oh, and the sources mention a lingering governance risk, historically issues with shareholder meeting quorums, though maybe more institutional investors post-settlement could help with that.
Okay, so a lot has changed. A lot is still developing. What are the key things investors should be watching for next? The catalysts.
Several key things to monitor. First, the official 8K filing confirming the Samsung settlement. Even if the amount stays confidential, the filing itself is confirmation.
Second, and maybe the biggest one.
The capital allocation announcement. This is huge. Management has to tell the market their plan for cash dividends, buybacks, R&D, M&A, the mix. That sets the strategic direction.
Makes sense. Third.
Watch the court docket for the official lifting of the stay in the Apple case. That confirms the next legal chapter is formally underway.
And finally, just keep watching the regular updates.
Yeah, the quarterly earnings reports.
Sure.
But the focus is totally different now. For just cash burn, you'll want to see growth in high-margin licensing revenue and, crucially, evidence that those NRE projects are converting into actual production licenses. That's the proof the new strategy is working.
So pulling it all together from the material, Neonode really has gone through a massive transformation.
It really has. It's shifted from, you could argue, a speculative buy, totally dependent on the Samsung outcome.
Yeah, binary bet.
To a company with a solid cash floor, real potential in its funded tech business, and that added kicker of a de-risked Apple claim.
The question isn't survival anymore.
Exactly. The investment thesis now isn't about hoping they survive the next lawsuit. It's about betting on management's ability to execute, to build value from this strong financial position, plus whatever bonus comes from Apple.
Okay, so with Neonode in this new position, cash secured, here's a final thought for you, the listener, to chew on. Looking at those options, returning cash directly via dividends or buybacks, reinvesting heavily in the core business, or going for growth through acquisitions, which path do you think holds the most promise for creating real, sustainable, long-term value at Neonode now?
That really is the billion-dollar question, isn't it?
It certainly is. Thanks for joining us on this deep dive into Neonode's big shift. We'll be back soon with more insights from the materials you need to understand.